Most traders lost money this week, not because the market was difficult, but because they refused to stay out. Hello, everyone. Welcome back to Your Nifty Guy. I hope all of you are doing well. I intentionally skipped the last two videos, and that was a deliberate decision. The market has been extremely volatile and completely news driven. In this environment, forcing trades is not skill, it's gambling. And as traders, our priority is capital preservation, not constant participation. And now, in today's video, we are going to break down the entire week's price action objectively without any noise or bias. We'll decode how the structure actually evolved, where the real opportunities existed, and what the market is signaling beneath all this volatility. And most importantly, we'll build a precise trade plan for Monday, key levels, clear scenarios, and a structured approach so you are not reacting, you are prepared. If you value disciplined and process driven trading, hit the like button, subscribe to the channel, and share this with the traders who are serious about improving. And before we get into the charts, the link to the Telegram channel is also in the bio, so make sure you are subscribed there as well. And yeah, so the last video that I had posted, or the trade plan that was there with regards to the price action or the trade plan for Wednesday. Now on Tuesday, which was the expiry we had planned, and we had closed near the day's high, right? Everything looked bullish, and right now what actually is happening in the current scenario is that Indian market specifically is being extremely sensitive to news, the Middle East news which is evolving, as well as to the prices of crude. And kind of it looks like it has decoupled from the US market. Only in terms when the US market is positive, Indian markets can still be negative. But if the US markets are negative, Indian markets are definitely negative. Uh, so it is not just a kind of markets which should be traded aggressively. Right now, you need to play it like a test match and not a 2020 match. You need to be extremely defensive, extremely defensive, and save your capital. There are multiple instances of traps which I will be showing you and discussing with you in this particular video as well. So yes, make sure you are there till the very end. There are some important key learnings. So what usually happens in my videos is I'm not just trying to give you guys a trade plan that this is what is the trade setup and this is what exactly you should do. While we are doing and planning the trade setups for each of the trading day, I also try to explain my view of looking at the market, or how I actually look at the market through my eyes, and the deep in depth. There are certain ways in which if you can look, you can try to understand which what exactly is happening in the markets, and based on that you can react accordingly, right? So yeah, stay till the end. This is going to be one important video, definitely. So yes, this is what we had planned. So again, on Tuesday, it was on Wednesday, it was a good trap. Markets opened with a gap down, moved quite a bit, and then gave a small retracement till about 50% of the fall. This will, if you put the Fibonacci tool, it will be roughly around the 50% move of the fall, the retracement, and then went completely sideways. And anybody who would have trapped, who would have traded in this particular area would have been trapped as well. Now, this looked like a very good kind of, again, a sideways price action, of course, post the expiry. And if the up move had to be continued, it was a good day to continue, was Thursday. But then again, Thursday opened with a gap down of, I believe, 175 points. So this is a day wherein from Wednesday till Thursday, I had carried over a option selling trade after a very long time. So I was not actually carrying any overnight trade. So I had made a personal rule that uh, for both option buying, so it is I close all my positions by the end of the day. But in option selling, earlier I used to do some carryover trades, because simply because you are getting some theta decay advantage of the markets shutting, and then the next day when the market opens, and in case if the VIX is kind of in negative, you get a good DK already. Plus, I only carry over trades when I had a good buffer. So on Wednesday, this sideways move, which was there, it gave me a good cushion to start with, and that is the reason, against all my rules, I decided to carry it forward simply because I had a cushion of profit. And even if things were going all against me, it would have been still not a big loss for me. So I actually did carry forward that particular trade, in which again, because of this big gap down, and I that setup is actually completely automated, and the stop losses and everything, as a percentage or of the total capital deployed has already been put in the system. And because of the gap down which came in, uh, although the markets had recovered post that particular gap down, but I got stopped out at right at the opening bell in that particular trade. uh, Although if it would if it the trigger would not have been, if it would not have been automated and trigger would not, this trade also would have yielded me double the profits that I had closed the day on uh, Wednesday. But again, once again, this is what I'm trying to tell you. The news, kind of news that came in, I believe it was again of some Indian ships being captured by Iran, Indian ships being attacked, and whatnot. So there is a multitude of news which is coming in right now. You do not even know if they are funny or they are frustrating, right? Mr. Trump tweets something which is contrary to what Iran does, and this whole war is kind of looking like a social media war more than the actual war which is happening right now. Everybody is trying to prove that they are supreme and that they have won the war on social media. Whatever it is, this is something which is outside our territory, outside something which is completely outside our control. So yes, I did get stopped out on this particular day. Again, I entered into another trade because I'm not actively looking at option buying trades right now. Like I have told you, things are extremely volatile. There are traps. So even if on this particular day you see the markets tried to fill the gap, failed, did not even break the low, went sideways again. At the break of this particular high, invited buyers took their stop losses and again closed down near the lows of the day. So this is the day will come down on the daily time frame, wherein, as per the daily time frame rules that we follow, trend looks like change, and today we did get a follow through. Now today's price action, again we got a gap down, and a good move which came in right at the start without any good solid pullbacks. Now the pullbacks which again started coming in again here, try to understand these trades are not tradable simply because we have to see where the market is already coming from. And if you see the kind of momentum or the move that you see out here, do we see that anywhere out here in any of the subsequent falls? No. All the pullbacks were being sold into, and we could see a new low forming again and again and again and again and again until this particular move which came in the later half of the day. But then in all this particular entire downtrend move which came in, do we see any fall which is a momentum based fall like that we saw in the morning? Absolutely not. So that is the reason why we need to try and understand where we are coming from. We have already traveled a lot of distance, and the probability of it traveling, of course, it can go, but the probability reduces multifold. Now, there is another thing that I wanted to discuss out here with you guys is that if you observe closely on the 5 minutes, on the 15 minutes, there were a lot of divergences that you could see on today's chart. While the prices were making new lows, the RSI was continuously making new higher lows, right? And the same is the story on 15 minutes charts as well. It was kind of not exactly higher lows. It was higher lows, but then the slope is not as steep as it is on the 5 minute chart. But then that is something which does not matter in terms of RSI. Right now, I received a message from one of the community members who had actually taken some long trades based on these divergences. Now, I would want to clarify it again and explain once again. RSI is secondary, price action is primary. Now, out here in this entire fall, there was not even a single structural change in the markets, wherein market shifted from a lower low to a higher low formation. And till the time being that is not being done, we as structure or price based traders cannot take a long trade simply because a RSI divergence is there. Now, how do you use make? Because the RSI has is something which is always there on my charts. Anybody who has been following me since the last 1 year or so that I have been putting these videos on would be knowing that RSI is there forever and maybe the only indicator that I use. Now, the use of RSI right here around here is, say for example, you are in a short trade and you are observing divergences, that this is your cue to get out of those short trades, right? Not the cue to go long in the markets, right? That is something which I have also spoken about widely in the RSI video that is there on this particular channel. So if you go and search for RSI video on my channel, you will be trying to understand. So why 90% of the people use RSI in a very, very wrong way, which is this, that they spot a divergence and they think, okay, RSI has given a signal, it is time for us to go long. Absolutely, absolutely wrong. There is also a concept which is known as RSI cool off, where in market goes sideways, RSI goes up. It looks like a divergence, but then it is simply RSI cooling off so that the markets can go further down. So that being said, secondary, RSI should not be used as a tool to take trend reversal trades, right? So market is falling. If you spot divergence, should not be taken as a trend reversal trade. Let the markets commit to you before you commit to the market. Let the markets actually show you a trend reversal in terms of price. Let the structure change, and then you plan your long entries, right? This is what actually also happens with markets such as this when you're seeing that, okay, you have missed a move which came in from the highs, you've missed a move on the downside, and now you're looking for making a quick buck and you want markets to change their direction. You also get confirmation based on RSI, and then you take a trade, and ultimately you give some of your capital again to the market. So yes, that is something that you should not rush into. And RSI is a very, very powerful tool and can add a lot of value to your trading, but only if used the right way. So out here in today's sense, RSI, the only use of RSI was to make sure that you get out of the short trades and not look for any long entries. So I hope uh, the in a gist it is completely I have been able to make you guys understand how to use RSI. But then if you need any detailed clarity, please make sure to go and watch that RSI video, which is specially dedicated to it, and you will be learning a lot. Now we'll start with the weekly time frame. On the weekly time frame, completely okay. Since the time the trend had changed to bullish, we got a follow through. Now this particular candle has a higher high, has a higher low, although we have not closed above this, but then still two of the conditions are, it is not a reversal candle, so we are okay, comfortably closed, comfortable out here on the weekly time frame. Markets moved up. Of course, it is not simply going to keep moving up. In case if market has to change its structure on the weekly time frame as well, we can look for some higher low which is formed. So this is the closest swing which is there. We can form a higher low and then the markets can go up again, right? So on the time, on the weekly time frame, completely okay. But on the daily time frame, if you look, we have actually changed. As in the biasness now remains on the short side after Thursday's price action, wherein we got a lower high, a lower low, close below the prior low. All three conditions fulfilled. Trend changed. Plus, we got a follow through candle today as well. Another higher low, higher high, sorry, lower low, lower high, closing below prior low. So, trend is kind of not actually trend. Markets had actually moved quite a bit out here. Of course, most of it was in gap. We have a major gap area marked out here again. This was another gap which got filled today. Now maybe we come back, we fill this particular gap as well, and then with the creation of a higher low, market moves up again. So that is something which can be expected as a further future trajectory in the Indian markets. Whatever it is, we are not here to predict. We are simply going to prepare ourselves, and based on how the market is shaping up in the following week or following weeks, we'll be planning or playing out our trades. Now, again, there has been news post the Indian markets closed about Iran's delegation reaching Pakistan, and US is also sent in some more senior officials for the uh, peace talks and trying to sign agreement between the two countries to stop this particular war. And as a result of that, I believe Gift Nifty was trading higher. We saw some positive movement. That is something which I read. Yes, again, yeah. From the lows, Gift Nifty have has actually moved up quite a bit, 300 or 1.5%, 300 points or 1.5%. Yeah. So that is something which came in post the Indian market. Another thing again, India VIX again has been on a rising spree since the last 3 days after this particular fall that we had seen. So yes, please keep an eye out on India VIX as well. It can rise further and then maybe give a fall. So rise in India VIX is usually also associated with the volatility. Now, whether we are going ahead and filling this particular gap or we will be taking in support from these levels is something that we need to watch and keep an eye on. But for the time being, from this particular high to this particular flow, we will be marking our fib level. Now, in case if there is some positive development over the weekend with regards to the ceasefire, not the ceasefire, ceasefire is already in place with regards to complete stop of the ongoing war, which is there over the weekend. Of course, again, we are seeing some people getting trapped who would have taken home shots seeing all this particular price action. Uh, we will be opening with some gap up again on Monday. That again, once again, renders the day non-tradable for us. Like I have already shared in the past videos as well, in case of a major gap up or a major gap down. On an intraday basis, we do not get many trades. And it is a strategy that I use to stay out of the markets on days like that. So let's see how we open up on Monday. But as of now, based on the structure, this is what we will be looking at. Below today's low with a pullback, we can plan a short entry in case if we are opening with a gap up and around these levels. If we observe a negative price action, we can take a trade on the short side. Now, again, if you observe, this was the daily time frame fib level that we had marked based on this entire move, and this was a point 0.5 to 0.618 zone. And if you see, once again, market has actually the reaction that has come in, wherein market is trying to go down, has also come in from precisely from this level. And that is the reason why I always tell you guys that yes, fib levels work very beautifully on Nifty. Okay, I believe this is, I need to redraw them. Yes, so for Monday, like I discussed, if we are opening flat or again, we do not know. Right now, the things are looking positive, but we do not know. 2 days is a lot of time for Mr. Trump to keep his mouth and Twitter shut. So he will be out there, and God knows what is he going to blurt out next. And we will be preparing for all possible scenarios. So yes, like I said, if we open with a gap up and around these levels, if we observe any negative price action, that will be our cue to go short. And for any long entry, I will be waiting for markets to come back above these levels, and that is when we can plan our trade setup for as in long sides. So as of now, this is going to be the complete breakdown and the trade plan for Monday. Remember, clarity matters more than activity. You don't need to trade every move. You just need to be aligned with the right one. Stick to the levels, respect the structure, and most importantly, manage your risk. The goal is consistency, not excitement. If this analysis helped you, make sure to like the video, subscribe to the channel, and share it with traders who want to approach the market with discipline. I will see you in the next one. Till then, trade smart, be disciplined. Cheers, and thanks for tuning in, guys.